wherever you want. Excellent. So I've been told mics pick us up here, don't pick us up here. So don't need to go too far forward, but a little bit of leaning is good. Great, fantastic. So welcome to Seamless Finance. This is all about transforming African trade, transactions, and credit ratings. I'm Eyre, and I'm the founder and MD of Voxeon Communications. We help early-stage tech startups across Africa and beyond with their marketing communications. And I'm based in Cape Town myself. I'm originally from London, so it's always really exciting and very much a pleasure to come back to my hometown to talk about things happening in my new home continent. Although, every time I come back to London, I feel like more of a tourist because that's what happens. I've been in Africa since 2010, South Africa since 2011, and it's things change here quite dramatically. But Seamless Finance, as we know, it's not all about just speed and ease, although more speed and ease is always welcome. It's often about breaking down barriers, it's about creating new avenues, new routes, new opportunities, and I'm very, very happy to be joined by 3 gentlemen here that are doing this every day and are going to impart some wisdom for us today. So I'll start here with Wayne. This is Wayne Hennessy-Barrett, founder and exec chairman of 4G Capital. So Wayne's company just took home the best fintech at the African Banker Awards. So congratulations. Have a little clap for that. And Wayne's he's very much a passionate advocate for African capital staying in Africa and for tech-led solutions that genuinely uplift entrepreneurs and build financial inclusion. So fantastic to have you on the panel today.
Thank you.
Then we have Shay Ebenezer here. He's a commercial banking heavyweight. I'm sure many of you will have come across Shay before, and he's now a fintech founder. And under his leadership, Payaza operates across 20 African countries, and probably growing every day by the looks of things. And he's very much bridging businesses with fast, secure payments infrastructure, and he's got really deep expertise in finance, in capital raising, and cross-border expansion. So we're really excited to hear some of your insights today. Thank you. And then we have Shay Hamilton over here, CEO of Tola. And Tola leads one of Africa's fastest growing payments orchestration platforms. And he's helped scale Tola to serve millions of monthly transactions across 22. I'm always wondering how many, because by the time from getting this information to you sitting here, things happen.
Well, 23 is in progress at the moment, but it's not live
exactly.
yet.
Things happen very quickly. So he's very much got a focus on mobile-first design and profitability, and helping Africa's digital economy really grow from the ground up. So fantastic to have you all here today. But let's start with a bit of a context setter and big picture. I'd like a bit of a round robin on this one. So what does seamless finance really mean to you, and why is it mission critical right now for our continent? Start from that end.
Yeah, so for myself and for Tola, in our experience, seamless finance is it's the removal of the friction and the barriers that are presented and encountered by our merchants when trying to take and make payments, when onboarding to platforms, and for reconciliation of those payments. So that's what we're trying to do, is try to remove those barriers, make it easier for our merchants to transact with the consumers that are out there. We've started with mobile money integration, so effectively connecting up to all the mobile money wallets across sub-Saharan Africa and making it easier for the merchants to transact. And if we can do that, then the services that the merchants can build on top of the infrastructure that we're building will be good for them, it'll be easier to use, and be good for consumers as well.
All right. For us, seamless finance simply means, for my years in banking, spent about 15 to 16 years in banking, then venture into payment. Then the question is, what's the future of banking? The future of banking in Africa is payment. Then we put ourselves together, we look at the market size and what are we going to do, and then how we're going to phase that instead of the brick and mortar which we experience. And then the future simply talks about two things: bridging the gap from the so-called depositor to the bridging of loan facility, and how you're going to create that ecosystem and seamless and then still be profitable. So that's what gave birth to Payaza. And we strictly look at B2B because we want to look at our businesses, because Africa is centrally around SME, and seeing the growing population of businesses there and how entrepreneurs are forging out and how they are doing their businesses. So that's what gave birth to Payaza. And then looking at how financing in Africa has to be taken seriously, because if you look at the total population of Africa, about 1.6 billion, the capital adequacy there is quite very, very low. Capital structure, very poor. Capital formation poor. So I think it was, I was the last at AFDB, thinking the World Bank represented the Africa, we need almost about $1.988 billion to meet up with the West. So looking at all of those structures, so financing in Africa is very, 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 is something we need to take very serious. And that's what it is for us. Yeah.
Great.
We're really honoured to be here, especially with such extraordinarily impressive founders and businesses. I guess for us, seamless finance is financial inclusion. So my friends here really are helping to scale the rails, the payment systems. We're the credit product exquisitely designed to propel micro and small enterprises. A lot of people, and making sure that people can access working capital on terms which work for them when they need it, and to be treated with the dignity and the respect that they deserve. Because the old mindset of aid and poverty, I think, is really yesterday's story. What we're talking about is a $10 trillion market opportunity for the finance gap globally, for micro and small enterprise working capital requirements. And so we're proud to play our part in the East, in Kenya and Uganda, by providing these working capital solutions, and specifically we blend it with enterprise training. So we don't just chuck loans at people, because we know that that is fraught with risk. We give people the knowledge as well as the means to succeed, and the customer success outcomes are extraordinary. We're a B corporation. We're a very proud measurer and adherent to the metrics that really demonstrate the customer success. And so we've had some success in being able to quantify that and to have third-party endorsement for it. So what we're looking to do next really is to just spread our wings, to grow and to enrich and to deepen our ability to grow the economy within Kenya and Uganda. We've just launched our new tech stack. So we are completely digitally autonomous, and that's an incredibly exciting place to be. We're looking at what AI can do in terms of future product design, accelerating code releases and quality assurance. And so I think that between us and between everybody in this amazing event, we're talking about African solutions to global problems, and we should be really pretty proud about that and pretty confident about it as well. So yeah, great to be here.
Fantastic. Thank you so much. So we can't have a payments discussion without a bit of a discussion around infrastructure. And Shay, you've argued previously that it really has to be a mobile-first approach and can't be card retrofitted. What are some of the challenges you've had to overcome in that space?
So yeah, absolutely, I've argued that, and I guess the reasons are. I absolutely love. I'm a big fan of mobile money. I have been from the first day that I saw it, and the features that it provides. Anyone that's been talking to me at the event so far may have heard me telling the story about only this week. I received an email from my bank to tell me that they were launching a new feature in September, and then they had patted themselves on the back to tell me that it's on the back of a feature that they'd launched just a few weeks back, which was any payments that were coming into my account would now appear instantly. And I'd noticed that because when I sent money from Revolut to my bank, it was appearing straight away. The feature in September is around sending money from my bank account to other bank accounts, and that will now be instant. So straight from my bank account to Revolut, and that's coming in September. So that's fantastic in 2025. And mobile money has been a real-time payment system from the get-go. So what you have is you've got an absolutely fantastic financial platform across sub-Saharan Africa. And that's just one feature. You know, we can go on. You can look at we're talking about retrofitting. You can look at what's happening with the retrofitting in the Western world with the legacy banks and the card things, where originally when you had your credit card, it was a piece of plastic in your hand, identified you, and maybe you had a signature. That wasn't that hard to forge. When chip and pin technology came along, you now had a secret in your head that you pop your card in and you put that in. And now they started doing two-factor authentication where you know it can be a push out to an app on a phone to confirm that it's you that's making the payment. Again, mobile money has had that two-factor authentication built in. And all the while, if I want to shop online, if I've got a credit card, I've got a 16-digit number that I'm terrified of. I guard it with my life. You know, I can never remember it, so I have to take it out and look at it when I'm putting it in. And if I want to put in mobile money, I put in a phone number. I don't care who knows my phone number. You know, I give out my phone number. It's on business cards. It's on email signatures. You know, and if someone happens to put my phone number in when they're trying to purchase something and think it's going to get charged to me, I'm going to get the pop-up on my phone to say, I'm about to be charged, enter my PIN. And that's all been built in from the get-go. So absolutely, mobile first is absolutely the way I see it going. And it's that understanding that the solution and the systems that are in place across sub-Saharan Africa, with the exception of the two biggest economies of Nigeria and South Africa, which are more card and bank-centric, but the 22 regions in which we operate in, absolutely, mobile money is the de facto payment mechanism, and it's a fantastic payment mechanism. It's not a poor man's banking system. It's actually a fantastic and better in many respects than some of the existing financial systems that are out there today. In terms of the challenges of building out that infrastructure, it's an arduous road. We've got the scars and the war stories to talk about and to show you in terms of the last number of years connecting up to each and every one of the wallets. And we've seen improvements since we started. We processed our first transaction with M-Pesa in Kenya in 2015. We're now, at that stage, that was our only region. We're now obviously in 22 regions, and we've seen connections to the mobile wallets where you would receive the API documentation. The engineers would go through it, have a look at it, and think, okay, right, this is the way we do it. Then go to connect and realize the API they're actually connecting to bears absolutely no resemblance to the documentation they've been given. And they're connecting to the test platform, so
bonds instantly. Or you say the almighty Ghana, you get into Ghana, you mess up, they deal with you on the spot. So you have to have a deep local knowledge on the spot. So, and how do you have this deep local knowledge? I think there are two principles. I think that I learned this from my late boss, Herbert Wigwe. So you get into any market, and those days where we're doing expansion into banks, in the banking space. So to get into new market, first thing you need to look out for the best banker and the best lawyer. So those are the two things that are very paramount. So the best banker will tell you how money flow is in that economy. And then number two, the best lawyer is going to tell you what are the regulatory landscape, how are you going to manage it, what are the things where you should do and what you should not do. So that, and then on the strength of that, most of the time we get into market while we were doing our expansion, because I've done same thing within the banking space. So it was quite helpful for Payaza when we're going into all of those spaces. So those markets where I've operated before in the bank, doing M&A, doing all sort of within the financial space. So it was helpful to get all of those contacts. But we look at, sometimes we make the error of, these countries are highly populated. Probably you look at Nigeria. Nigeria has over 270 million population. You say, based on this population, I'll be able to harness all of this. Whereas you look at Ghana with 35 million population, which is more profitable than when you look at Nigeria when you're assessing, or you look at Ivory Coast, Abidjan. So the analysis should be based on efficiency rather than the numbers. So which is one of the things that we put in place, so which helps in terms of the capital deployment. So you get your capital, so you have to manage. You can get into Ivory Coast, Abidjan now, and then Abidjan would be one of the most profitable enterprise rather than running through an enterprise where you have 280 million or 65 million in Tanzania, and then all you can do is just a few transactions and you just get out of that account. So those are one of the challenges in, and then I think recently Ghana is doing very, very well in that regard. They signed a passporting whereby you have a Ghana license, and then you can do business in Rwanda. You can do business in Uganda as well. So they signed a passporting. So when you are licensed in Ghana, I think you can operate in two markets. So that regulatory environment is coming up to play gradually, and then Africa is really, really persuading. And then another biggest challenge in that is managing your FX. I mean, what's it called? Because there's volatility within that space. So my own suggestion is you have to have a centralized FX system. What do I call centralized FX system? You cannot manage the risks of Ghana separately from the risks of Nigeria vis-a-vis the risks of Ivory Coast. So centralizing your operation, have a single treasury that look at all of those currency in different bowl, and then be able to take an effective and a smart decision at once, so that it can affect all of those currency at a glance. Yeah.
Yeah.
Thank you.
Yeah. Fantastic. Thanks. And it's, I think from a regulatory standpoint, there's always going to be that need, and you mentioned that early on, is that need for the local experts, the real deep expertise, and knowing people on the ground that can help you with that. 100%. Yeah. Fantastic. And coming to you then, Wayne, mentioned in the intro that you really genuinely believe in African capital staying within Africa. How do you see that being a reality, and what are the big challenges? Could be structurally, politically, that are actually making that difficult at the moment.
So I don't think we should be completely exclusive about because clearly flows of capital globally are a good thing. But at the moment, there is I think $4 trillion worth of potential investment within the continent of Africa. I think I got that from Semaphore Africa this week. Fantastic publication if you haven't found it, by the way. And I mean, that's a lot of money, okay? And it's sitting, doubtless earning interest or going into safe treasury bills and government bonds and stuff like that, but it is not being mobilized to help local development and local communities to grow. And so, hands up who's a startup founder in Africa. By all means, stick your hands up. Let's kind of open it up to the room. Okay, who's a startup founder in Africa who actually got local African investment in your company? or did you not? Great. I mean, we got there in the end, but to begin with, you're going to the US VC community, you're going to all the impact funds, all the usual suspects, the DFIs, yada, yada, yada. It's $4 trillion sitting, right, in our continent. And it's not helping drive financial inclusion. It's not. If you go to the societies, African entrepreneurs are the best in the world because they have to be. Our customers are fantastic. They're resilient. We should be teaching the world about business, and we should be helping ourselves and helping each other. And so, why is that not happening? Because all too often we're still operating in low trust environments. And I'm going to make a couple of contentious points now. Coming from a position of absolute love and respect, but it shouldn't be this hard to do business in Africa. Why is that? Because African governments are not as pro-business as they ought to be. Pole sana, that's the truth. Tax regimes are too high, 30% on your profits, bang. That's nuts. Okay, you're now not incentivizing people to be part of the formal economy. You're actively incentivizing tax evasion. That's not cool, all right? If you're a good corporate citizen, like we are, okay, and you employ tons of people, and you pay your taxes, and your employees pay their taxes, okay, then, people make some pretty...
It's
whoa, my goodness.
Taxman
Hello,
heard.
Mr. Wangi? The check's in the post. Yeah. So, they don't make it a joy, right? They don't make it a joy. We're trying to do a good thing. We're trying to grow the economy. We are doing a good thing. We are growing the economy. But, you have the target set, the companies that are up there and listed and registered and all the rest of it, and those trees are being shaken until the branches are breaking. And the golden geese that lay the golden eggs are being slaughtered, whilst there are vast tracts of dark economy who are tax exempt, that are not doing responsible activities, okay, and that is not good for confidence, it's not good for unlocking internal growth, it's not good for opening up the opportunities for African entrepreneurs. All right, so I'm afraid that is something that does have to be said. I think also there is, and I think this is work in progress, because we've definitely seen things get better, but there's a default toward an adversarial mindset, I win, you lose, as opposed to I win, you win, because we work together. Example, some of my friends in the fintech community were always saying, we're coming for you, banks. We're going to take it away from you. We're going to be the future. And we've never played that game. We've never played that game because it's dumb. We need banks. We need successful banks. We need banks where you can put your savings with total confidence that they are going to be there when you need them. Okay? Now, those banks should not be doing high-risk, innovative, bleeding-edge, leading-edge, tech-led products like we are. That's our job. But we need access to local currency, and we can help get alpha onto that bank's balance sheet in a way that diversifies their exposure, so it's not just lending to other banks or to whomever. And they are then playing their part in MSME growth and helping their communities to grow. And all of a sudden, now, whoa, we're all making money in a way we can be proud of. And I have a success story to report on this because our debt funding is now 80% local currency. That's great. 10 years ago, we were totally dollar funded from the impact investing community that charged some pretty impactful prices. They were very happy to get the 17% on the dollar annually for a 3-year note. And that was the risk they're pricing for. Good on them. We do completely unsecured loans, okay? It's not something that people are comfortable with. But as we grow the track record and as we get the data going, the knowledge and the confidence should be coming to help break down some of these psychological barriers to trust, to collaboration, and where we should all be actively having respectful, collaborative discussions with regulators, with tax authorities, with governments, to say, please, we are part of the solution. We can help unlock a huge amount of wealth, and we can actually do something to be very, very proud of. So, those are not comfortable things to talk about, but I think if you really care about what you're doing, and if you really love Africa, you've got to kind of focus on the problems, not on the happy talk.
Yep, absolutely. And coming back to you, Shay, I mean, you're somebody that has raised lots of capital, and you've led cross-sector deals before. So from your perspective, how do we really ensure that the growth within Africa is something that is sustainable and inclusive and not just rapid as well?
Okay. Thank you. So I'll start my response from a backward integration kind of. So I was discussing with some group of people, and I'll use this analogy. That when something, it was just a quote that I read something, that when something is in the air, it doesn't have any weight. Mm-hmm. But once it hits the ground, law of gravity applies. So, and I'll pick it from two sides, because I've done banking, I've done payments, and I've looked at capital on both ends. So capital really chases people with integrity, and I'll explain. So, and there's a question I normally ask when I do that. Why do a thief have a bank account? Someone who has gone to steal money, and he will still go and deposit the money in a bank. There's only one reason. Because he trusts the bank so much that he knows that anytime he gets to the bank, he will be able to withdraw his money. So if you can have the integrity of a bank, then capital will chase you. There is a lot of capital in Africa. I've done banking and I've raised serious capital for different, but we stop raising money and then giving capital to people who does not have the discipline. So, and I'll give cases. When we're starting up Payaza, one of the things I said to myself and my team is that we're not going to raise a dime from anybody. We're going to put in our money and we're going to bootstrap this company. And we're going to run it as if it's our blood that we're putting on the line. And then so that when we run this business profitable, then we'll be able to go and meet someone with capital that we have done this with our own fund. And then we'll be able to attract this particular fund. So what am I saying in terms of capital sustainability is this, that when you look at the first thing that will make the project very well or accessing capital is that understanding your risks within that sector. So, and then why do you do this? So, which brings us to the case of credit rating. I was reading a report just 2 weeks ago. I was having an interview with, because we are currently doing our Fitch rating. So, in the West, so I'm currently studying in the US. So, in the West, we have about 33.1 million businesses. Out of the 33.1 million businesses, about 7 million have credit rating. That means that either investment grade or non-investment grade, or they pass through a particular scheme or anything before. But contrary to what we're talking about in Africa, let's say we have about, Nigeria has about 270 million, 80 million SME. You add it all to Ghana, 33 million, it has about 16 million businesses. If you put this simulation together, you can get almost about 480-something million businesses. We have less than 500 with credit rating. So you can first of all see the gap where the sustainability is not there, because the credit rating, what does it do? It does three things. Check up your corporate governance so that you, the said founder that are in charge of the capital, you don't have autonomous right that, oh, I just feel like taking money out of the business today. There's a control process. Number two, that the credit rating checks is that check your financial stability. Now, how are you managing this fund? Are you profitable? Number three thing that you checked is that what is the future? How do you want to forecast? What are the things that you have to do to be profitable? Not every product, not everything that you have to invest in. So those are the things. So if you look at those three parameters and then you put those things within your business cycle, automatically you'll be able to access capital. And then what am I saying? So one of the issues that we even have across is in the West. You look at most of the African businesses or corporates, we get like a prejudice rating. Why? Simply because they say, oh, they perceive the risks in Africa is very, very high. But that is not true, because the data that we are pulling out are not variable. Same, if you look at, there's a report from, I think it's AFDB by Samaila. Africa has the lowest default rate. I mean, followed by number one is Asia. I think that was 1.3. Number two is Africa at 1.9. If you could tell, North America has almost about 6.5. Latin America has close to about 10.6 defaults. The biggest one, Eastern Europe, has almost about 10.5. So you can check all of those numbers, but we are not presenting our case and our data as a case maybe. So correlated with what you were saying, that we have a lot of capital within the space, but we're not putting those capital in the right form. So one of the things that I'm advocating, I'm gathering up with some of my guys in business school, that we have to come together and start the conversation of rating ourselves and begin to, let's say Payaza makes some money, there's what we call retained earnings, retained capital. So I put a certain amount of money together. Once there's an African company that is rated, that we're seeing that has done something extraordinary, then we come together, we fund that African company rather than going to the West to raise money. So once we fund them, we put the person through the process of that our own internal credit rating system, not the external credit rating system. We put it through, then such a way capital is going to be sustainable within the process. We're going to have a future plan of giving out all of this. And then if we are funding such founder, automatically we know we are funding people with integrity that understand that there is difference between debt and equity. Most of the time when you see people with equity funding, equities tend to make people indisciplined. Equity tend to make, sometimes, not everybody, make people to spend without consciousness. But whereas debt make you to know that you are going to pay interest on this, you'll be looking at your cost per line. That is one of the things that we imbibe in Payaza. Because when we're starting up, within first few years, we check to the level of we apply something we call activity-based costing. So even though to the level of the chair that you are sitting down, we'll measure it and know that is this profitable. If I onboard a merchant that is not giving my AWS cost, I have to disengage you and I cannot process for you. So I have to just manage all of it. So when you do that and then your line become profitable, then you'll be able to churn out profit and then you help the ecosystem. And contrary to the other part, when you begin to see a tech company, this tech company has not done well, this has not done well. No, it's an ecosystem issue. We have to build up the ecosystem to retain the capital, because capital formation in Africa indeed is very weak. But we are the ones that we have to turn it back and ensure that we begin to inject this capital, not just into our retained earnings or talking about valuation or pushing the number. We have to bring out the capital out of our own space, begin to invest it in other serious-minded founder that could go through that process that we went through. For instance, if anybody comes to me and says, oh, Shay, I want to raise money for lending and all of those things, the first thing I tell them, do you have license? Most of the people that want to get money from, they never care to get a license. So what's my control measure on you? How am I going to protect my capital? What are the things, if anything happens to you, so who am I going to report you to? So most people just come with all of those products, and then we find ourselves in not sustain. But if you want to sustain the capital, it's for everyone, go through that credit process, use the best of the audit line, subject yourself to questioning, and if you can do that, then capital and you're a person of integrity. You just don't wake up and be a founder overnight. Yep. People, as in you're writing your CVs every day, and then when you start up, people can trust you in line of your businesses, and then that's how capital is being sustained.
Fantastic. A lot of wisdom there, and I'd like to come back to credit ratings again in a moment. Before we do, I was reading a stat recently about e-commerce in Africa. By next year is going to be around $72 billion, something like that, which is huge when you consider that it was less than 10 years ago, it was around 17 billion. So, it's a really exciting space to be in at the moment, and I've been lucky enough to work in it for a little while previously in my career. But I'd like to hear from you, Shay, about what kind of, with that amount going through, what kind of infrastructure are we going to need to really help this next generation of digital merchants that's across the continent?
Yeah, so, I mean, the merchants, I spoke earlier about the challenges that we had in terms of connecting up to the mobile wallets. But I've got an excellent technical team back in Dublin hard-working engineers, well used to hooking up to APIs. But there's lots of different merchants out there. Some of them are big enough that they have technical teams, lots don't. Merchants don't want to be connecting up to 3, 4, 5, 6 APIs. They want one.
Yeah.
That's what they want. And that's what we're trying to build in Tola, where we have a single API, and we started with mobile money. So if you take mobile money by itself, while I absolutely love it, and I've said I'm a big, big fan, and it's terrific for consumers, from the merchant's perspective, it's fragmented.
Yeah.
You have to connect up to each and every one, even mobile money companies who are in the same group. So you go to MTN in one region, and it's different to MTN in another region. Same with Airtel, same with M-Pesa. So mobile money on its own is fragmented, and the merchants don't have the ability or the time. They want to focus on their own business. They don't want to be connecting up to each and every one. Then you start to throw in additional payment methods, whether it's card and bank and whatever. And so our vision is to create a single API and orchestrate the payments on behalf of the merchants, whether it's mobile money, whether it's card, whether it's bank, whether it's crypto, and whatever. And that's our vision. And I think that will be fundamental and crucial to the success of e-commerce. Because if merchants are going to be tied up implementing the APIs, and then it's not just the implementation, it's the maintenance of the APIs. And our guys, you could pull your hair out the amount of time. There are some regions, we've got a region, when it goes live, we make it blue on our little map and we go, we're live there. That's not just one piece of work that we've done. In some regions, we've actually implemented an API about 5 different times for the same thing. As they've changed their API, updated their API, changed their provider, and so the API is completely changed. And you're not getting a new region or you're just maintaining the same one. So for me, I think with that e-commerce wave that's coming, I think the infrastructure businesses that are going to succeed are going to be the ones that can provide a single point, a single API for merchants to access multiple payment methods, rather than having they can then focus on their own business and not on supporting and maintaining the infrastructure that's required to take and make payments.
Absolutely. Great. Well, keep going. Sounds like you need it. Yeah. Great. I'll just got a couple more before we open to some questions from the audience. So I wanted to touch back on credit ratings with you, Wayne. Does seem to be somewhat of a misalignment between the actual realities that African SMEs experience every day and credit ratings and lendings. So how can we rethink this? How can we rethink around things like creditworthiness to just open things up more?
I really like the idea of an African credit rating. I really like the idea of African solutions to African problems. I don't like dependency on anything or anybody. I also am an Irishman, and so predisposition toward independence. And I think that having properly constructed, researched, staffed frameworks that can contextualize risk with real understanding is something that would be very, very helpful. I guess conversations like this are really important. And engagement with the media and engagement with the government, and we've just got to all act as a team when it comes to this and understand the facts in the conversation. But I can just tell you from my own business's experience, we've done over 5.5 million loans. We've loaned over $500 million. I think we're on 650 million now over the last decade or so, and that number is accelerating as we scale. And we lend completely unsecured loans to perfect strangers within 24 hours, and then repeat loans in under a minute. And of that journey I just described, about 5% of people don't repay on time, right? That is absolutely extraordinary. If there's no greater compliment, there's no greater testament to the resilience, the integrity, the value of the micro and small business community in Africa than that single statistic. That is unheard of in retail banking in the West. NPL rates are in the low teens if you're lucky, right? In a lot of places that are supposedly, more rich and more theoretically advanced. So the truth of the risk level is much brighter and much more inspiring if you're lending to the right people in the right way for the right purpose. This is not consumer finance. That's a very different story. But working capital that's going to help small businesses to grow, there could be nothing better. So, don't take my word for it. Go and look at the B Corp stat. Go and speak to CGAT. Go and look at all the other sort of bodies of knowledge out there. But, we've got to just kind of embrace the reality of what's going on. What makes that success zone is giving people access to opportunity. Okay, then how do we broaden and enrich that? We need regulatory frameworks that protect customers from predatory activity, that enable and encourage business. We need progressive tax structures that encourage people to make their contribution to society and then have the confidence that they'll get their pension, that they'll be able to access national infrastructure services and things like that. In Kenya, there's probably about 20 million working people of a population of about 55 million. There are 5,000 tax-paying entities, right? That is a massive opportunity to broaden the tax base, drop the actual tax rate, unleash the power of business to solve the social problems that are required. And I guess, the kind of the macro point is that there's this huge opportunity for African governments to, in the same way as financial services have leapfrogged, copper wire and loads of wooden telegraph poles going out into the distance with mobile technology and mobile money, that amazing leapfrog opportunity. There is a governance and government leapfrog opportunity to avoid what's gone wrong and continues to go wrong every minute of every day in the Northern Hemisphere, where governments stick to these high tax, high spend models which destroy productivity, ratchet up vast amounts of unserviceable debt, and slowly but surely suffocate the economy because the state is trying to do everything. Okay? We can't do that. We can't do that in Africa. All right, we've got to unleash the superpower of African enterprise, of African people, of African resilience, creativity, and export that out to the world. We need to be creating value within our own borders, whether it's coffee or other commodities or whatever, instead of just shipping everything off for other people to sell back to us. So you're paying $10 for a box of cornflakes, in Karen provision stores or whatever. It doesn't make sense. It doesn't make sense. We can do so much better. Got to do it right. Yeah. Can't cut corners, but do it with pride.
Love that. So just a quick round robin, and then we'll take some other questions from the floor. Wouldn't be at the Africa Tech Summit if I didn't speak about emerging tech, AI, blockchain. I'd love to hear from everyone on the panel what you're betting on in the next 3. I don't even like to say 5. 5 years is 2. 3. Let's go 2 to 3 years. What are the big things that are going to shake up the entire space for seamless finance? Let's start with you, Shay.
Well, obviously Tola is the biggest bet. I mean, if you're a gambling person, bet on us. In terms of AI, I think there is definitely a role for AI, particularly in what we do. You've all probably heard about the advantages that AI can bring to fraud detection and the like, and it can. In the payment orchestration space, we're primarily focused on mobile money at the moment, but we have just launched our online web checkout. We launched it in January in Zimbabwe, and that supports multiple payment methods, including card. So some of the things we're looking at is, how we orchestrate those card payments. We're not acquiring the card payments ourselves. We work with the likes of Flutterwave and Paystack and whatever. But AI can have a role in, identifying the optimal route at a particular time of day for a particular purchase or a charge to make sure that it's got the greatest chance of converting successfully. in going down this route rather than that route. So I think AI is something that can, and then there's the obvious ones about chatbots and things like that that we all love. But certainly that blockchain, for me, blockchain is just another technology. If we were starting now with our platform in Tola, we might consider using blockchain and whatever, but it would deliver the same. We'd be looking to deliver the same service that we're currently delivering. We didn't. Blockchain wasn't used when we developed our platform some years ago. We didn't use blockchain, and there's no point in changing it just for the sake of changing it.
Yeah.
So I joked at the beginning in terms of, bet on Tola, but that wasn't a joke. So, yeah,
That's great,
in the future,
thank you.
watch out for us.
Fantastic.
I'll invest. All right. So for us, we're looking at digital assets in the next few years. So, and I'll give you the reason why I'm looking at digital assets. So my background is finance, economics. So we're doing the research on what's been happening in the West, that's the US, over time. Look at what happened to case. We can pick up the case of Russia, pick up the case of SVB, pick up the case of Ukraine. So what's happening now? Once US, which is the most powerful nation in the world, hold their reserve, and then once they hold your reserve, you're unable to do anything. Once you get a sanction, you're unable to do anything. Then the next question is that everybody from Asia, if you look at the numbers, I think last week, a couple of what happened yesterday as well, there's a lot of sellouts in Tesla and all of this. The market, NASDAQ, went down. So what's been happening is that you see the market going off. Everyone from Singapore to China, everybody selling off their treasury bills and then going back to two things. Either they go to digital assets or go to gold. So because they don't want any issue with the most powerful country in the world. So those are if you look at the trajectory, then automatically there's going to be a shift in the next few years. So one of the things we do as a payment gateway is that let's position ourselves in the next few years to see all of these coming out, and then that's what we're partnering with. And then further down, you see the economy like Nigeria has about 2 companies in sandbox as we speak. Ghana is going to launch September 1st, a digital asset. South Africa is already live. Rwanda is coming after as well. So you begin to see the numbers tilting towards digital assets. So for any wise and intelligent payment system, you need all of those things. So they have just one single umbrella. That's digital asset here.
Tokenization.
Tokenization.
Stable coins and all that kind of stuff.
Yeah.
It's huge.
So he's been a trader.
It's too big a question. I mean, how much technology, how much is coming down the pike, as our American friends say. No one's talking about quantum. Quantum is going to blow our minds. The beyond exponential scale of processing power. If you go from a binary computational system to a much bigger, it's terrifying what that is going to be capable of doing. And then you add that to AI and cryptography and all the rest of it. There are going to be some extraordinary solutions coming along, and I am optimistic that we're going to get some very, very interesting and cool solutions to some of our biggest problems. In the closer term, your 3-year event horizon, AI, I think, is the obvious thing to be talking about, but I think we need to be talking about how we use it, and I'd like to see the conversation develop from the risk of automation and people losing their jobs to the beauty of augmentation. So at 4G Capital, we talk about cyborgs, not robots. We love having a human in the loop. Our customers love speaking to a relationship manager. With the machine learning algorithms that we've been using to date, we've got this extraordinary portfolio that I've told you about. We've been able to manage our customers' loan increment growth with enormous fidelity. So they're growing their revenues by an average of 82% year on year. It's nuts what can be done with something that's robust, smart, but that's not new anymore. Going forward, the way we're going to be able to improve the productivity of our relationship managers, to be able to scale digitally, but allow somebody to connect with somebody who genuinely is invested in their success and they're incentivized on the quality of their portfolio that they manage. That is really, really exciting. And so learning how to drive AI now is the life skill of the future. And that shouldn't be scary. It means, if you recall your undergraduate experience and just piling through tons and tons of books, and it was an exercise in referencing, wasn't it? You weren't really getting rewarded for original thought or creativity. You're demonstrating that you can say, yeah, he said this, and they said that, and they said that, and it's all in my footnotes, and can I have my, my pass, please, and go back to the pub, because that's what students do. If you can get AI to do all that stuff with confidence, now you are a creator, and your mind and your cognitive space should be in, okay, how do we solve these problems? How do you reset frameworks where you can bring people into productivity, into creativity? How can you help people understand different cultures and different viewpoints before you get to the conflict point? How can you identify where the resource stretches are going to turn into a problem and start aiming off for that? How can we start designing for climate adaptation instead of, tearing ourselves to bits because of the ubiquity of climate change? It's here. We know that's going to happen. But these are things we need to start thinking about solutions and not just getting terrified about what might go wrong. Sorry if that seems a little bit preachy, but I do think that there are some real opportunities to solve very important problems. And technology, it really is fundamental to it, but it needs to have human values and human love and human creativity and guidance.
Fantastic. Thank you. Right, do we have any audience questions? Do we have a mic somewhere?
That's a small room. Shout.
Yeah, well, you're right there. If you can
hear
just...
me?
Yeah, I think so.
Great conversation. Thank you. Great conversation. And all the points obviously well received, well taken. I'm not sure if we touched on the regulatory landscape and the policymakers and all the governments and environments you're operating in. With things like the digital assets, smart contracts, tokenization, everything that you're working on and everything you're working on, Shay, and you mentioned passporting, how are you influencing the policymakers and the regulators to embody this new future without the friction that typically comes with these advancements?
All right. So, first thing that I advise founder is that you must come from perspective of, let me use this phrase, smart people, or let me say disciplined people supervise smart people. And then humble people have access to everything in the world. Just take it out and then I said at a particular point in time, I'm going to write a book doing business in Africa because I know what I've gone through with regulators. So if you're going to engage regulator, you must come from humility perspective. That's the first thing, because these are people that have been in. Give it to them. They know they can quote section 10 of their policies and everything for you. Coming from Nigeria to Ghana to Ed, they know all of their policies. And they don't want you to see them as they are wrong. So, and I'll give us an illustration to that. There's a fund, Ghana is one of the countries we are recently licensed in Ghana. And then approaching Ghana is a big problem because I was there explaining my business model and everything. But I initially came from the perspective that, a business school boy, everything, presenting, doing all those analyses. I got my fingers burned. I had to come back. You bring your innovation, your idea to a practical level that understand that what they are saying is correct, but can you please look at this line and ensure that you reason along with them? Never go to any regulator with a superior knowledge. You're going to fail. They have to make them understand that what they are saying is very correct, but can we add this to it in a system that what they are saying, you are not removing anything from it, you are not canceling anything, but can we just do an addition? And then, so that's the way it works. So you work with regulators as a symbiotic operation, not that, oh, you now begin to talk as if you have the utmost. The second aspect to policies making is that it goes about one of the things that we need to drive across Africa. Case in point, do you know that the credit score rating that we're using in Africa is formed by the West? You will come and tell somebody who is selling small and SME businesses, like you were saying, we have 5% less, NPL, which is not obtainable. I know the numbers of American Express. I know that very terrible. But the question is that we have a credit rating system that we adopted that we didn't create by ourselves. If you pick up an example, Nigeria is a community-based environment. We started credit system from like Ajo. Instead of that, a commercial bank where I used to work, we use 5 C's of credit. They said capital, collateral, all of those things cannot work for somebody who is doing small and medium scale business. It has to be a community base, because if I know you, I collected money from you and I didn't pay back, you can tell your mommy, you could tell this person's father, they don't go, my name is going to get soiled in this level, then you automatically go pay back. Then that is the credit score, and those are the internalization that we have to do. When we form all of those policy internally, we're able to design something internally by ourselves. Then we'll now begin to, I'm a Nigerian, let's say you are a Ghanaian, this person is from Rwanda. We take all of those people, please just go and influence this thing within your own ecosystem. We put it within the regulator, we submit it, we begin to develop all of those policies that way, help those businesses outside. Because note, these people that develop it is someone that developed the existing policy. They didn't bring it from heaven. So we have to gradually begin to take those policies, instead of fighting them, begin to introduce it gradually to them to change the landscape to us. Case in point, you see what Afrexim have done with PAPS. PAPS is going to be the next NIPS for the whole of Africa, whereby everybody can do interchange. It was President Orama that started that, and then it was just an infusion into those processes. So those are the things that we can do, but nobody in this room, I always advise founder, should go to any regulator, oh, I just finished from Harvard, I'm from Northwestern, you get your fingers burnt on the spot. No regulators will listen to you now. You come by explaining with humility and make them understand with practical example of how to implement that without affecting their own reasoning. Then at the later end, they can now shelve their own reasoning for you and say, okay, then uplift yours. That's the only way to engage regulator within my own space.
Fantastic, thank you. Yeah, regulators are never wrong. They can just learn more.
Yeah.
Just one point on that is that, because rather than just jumping in and bashing the old regulators, you do have to tip your hat to them at some point, and I'll tip my hat to them on the mobile money side. I feel like I'm shouting about mobile money, but the 22 regions we're operating in, we wouldn't be there if the mobile money operators weren't able to get financial licenses and offer the services that they're offering. And so that's something I think they've got right, and are leading the world in that.
Excellent. Brilliant. Thank you, everybody. I'm sure the panelists will stick around for a chat. Unfortunately, we do have to wrap up. But this has been Seamless Finance. Thank you very much, panel.
Thank you very much.